SoundHound AI is an artificial intelligence company that uses audio to deliver artificial intelligence. The company's primary categories right now are for restaurants. Think of drive-through windows where you can order with your voice instead of speaking to a order taker. A drive-through assistant, you speak to the AI that takes your order and communicates and answers questions. So its opportunity is large, and so understandably investors are interested. Another big thing about SoundHound AI is that previously Nvidia was a shareholder of SoundHound AI, and just a few days ago, Nvidia disclosed that it sold its stake in SoundHound AI, and it's no longer an investor in SoundHound AI, and that sent SoundHound AI stock price crashing after that news. So it's getting a lot of publicity because of those recent developments. Regardless, I'm going to answer the question what a fair price is to buy SoundHound AI stock, and if at its current market price of $11, if the stock is a buy. So let's look at the free cash flow forecast, where the analysts on Wall Street are forecasting the company's free cash flow will go from negative 100 million in 2024 all the way up to 50 million in 2027. And from that point onward, I'm forecasting robust free cash flow growth from SoundHound AI, growing at 50% annually, compounded annual growth rate between 2027 and 2034, when I forecast it'll generate 840 million in free cash flow. From 2035 onward, the longer term growth rate I'm applying to SoundHound AI is 5%. So the present value of all of the free cash flow I expect SoundHound AI to generate between now and the very long run is 1.26 billion. The weighted average cost of capital I'm applying for SoundHound AI is one of the highest of any of the companies at 21.4%. I'm giving the company a cost of debt of 9.5%. The reason for the higher cost of debt is because the company is losing significant sums of money on the bottom line right now, and it's riskier than usual. After it reaches certain milestones, I would likely lower the cost of debt for SoundHound AI. The cost of equity is 22.7%, and it's because of the beta at 3.04. The company's higher than usual beta is because the stock price is more volatile than usual. It's been called a meme stock because of how the company's stock price is dislocated from the fundamentals. It's losing money on the bottom line. The growth rates are not that explosive, and its cash flow from operations are not growing as quickly as the stock price is reflected. Some of that was due to the fact that Nvidia disclosed ownership of the company, and because Nvidia owned it, it caused the share price to soar, and now that Nvidia divested, it caused the share price to fall. And so it's a volatile business. The beta of 3.04 I feel is deserved at this point. It has a market cap of 6.2 billion and relatively little debt at 43 million. So I'm giving them a target capital structure of 10% debt and 90% equity. The value of operations of 1.26 billion, we need to add the company's cash and subtract the debt, and we get a value of equity of 1.4 billion. If we divide by the number of shares outstanding, we get an intrinsic value per share of $3.88, and that compares unfavorably to the current market price of $11 per share. So at this point, I can comfortably say that SoundHound AI stock is overvalued. I don't have this stock rated as a buy. I have it rated as a hold. It's closer to a sell than it is a buy at current valuations.